Sipho, thanks very much indeed for coming through. I was making the point to an analyst who was sitting with me in the studio earlier that if you just looked at the top line and closed your eyes, you'd go to bed very happy. But if you drop them down, my goodness me, you would be very unhappy. What happened?
Well, actually, we're very happy for a couple of reasons. Firstly, what it shows is that the investment in mobile is paying off. And for the very first time this year, the absolute revenue growth in mobile, exceeded the fixed voice decline that we have seen. So for us, actually, it's a big shift because mobile now is the driver for growth. And the reason why BCX is down is for a whole lot of reasons. Firstly, public sector spending has been down. And Godfrey, we walked away from business, especially in the public sector over the last year, because we were also looking after the reputational risk of Telkom. So it was a very difficult decision because you have a contract with SOCX, you don't feel comfortable about it. Do you take the revenue or don't you? And we decided that we will not take the revenue. Rather, we lose the business. And that had a negative impact in terms of BCX revenue performance. If BCX had remained flat, the entire upside of 1.7 billion in mobile would have flowed straight to the bottom line. So solid set of results in a very difficult trading environment.
Indeed. So, Sipho, one other thing that you spoke about during these numbers is, of course, the issue of labor. And for as long as I can remember, labor has always been part of Telkom's issues. When are we cleaning this one up?
Yes. Well, I mean, you've got to be thoughtful about it, number one. Number two, you also have to always look at all available alternatives before you take the step that you need to reduce labor a lot more. And the way in which we normally do this is that we would engage with our trade union partners. We would be very transparent in terms of where the performance of the business is at, what the key challenges are, and then get to a point where there is an evolution that we can manage. But there is no doubt that there is still a long way to go in terms of cost optimization in the Telkom group. I think we've done enough on the Telkom, on the Openserve side. I think BCX still has some way to go, and therefore, you know, for us, cost efficiency is a journey that never ends.
When you look on the other side, though, when you look at the mobile side of the business, as the numbers show, certainly very good growth coming through on that front. But I have a question for you that I was given by my analyst who was in the studio with me, and here goes. He asking, where are you going to be spending the 20% of revenue that you're going to be setting aside for CapEx going forward?
Yeah, no, it's a couple of things. Firstly, the guidance is over the period, so it doesn't mean that we'll spend 20% every year for the next 3 years. We're saying we'll be spending in the range of between 16 to 20% over the period, which is a 3-year period, number one. Number two, I think also we've demonstrated that we can be very prudent with capital allocation. 4 to 5 years ago, this very mobile business had made an EBITDA loss of 2 billion. 5 years later, we are essentially 2 billion rands up at EBITDA level. So that's a 4 billion turn. And one of the drivers of that is that we were very, very judicious in terms of our capital allocation. As long as they showed growth, we'll feed them with the capital. If the growth doesn't come, we had the ability to stop the allocation of capital. So our overall capital allocation framework is really driven by returns and what will be in the best interest of shareholders. Whether we invest in the mobile business, whether we invest in modernizing the fibre business, whether we do a share buyback, all of that is informed by a very disciplined capital allocation process. And our guidance certainly doesn't suggest that we'll be spending 20% per year for the next 3 years. That will be the range.
Right. Talk to me a little bit about competition within the mobile space. We know how tough it is out there. We also know that ICASA, of course, is breathing down hard on you guys. Where are those numbers and where do you want to take them?
I mean, competition is very tough. We are the smallest of the 4 operators. However, we've decided we'll beat a different path. And our path is around data-led propositions. So that's the first thing. We're building a data network. 3G, 4G will most certainly by 2020 be the most 5G ready of the operators because we don't have legacy 2G voice. We've moved essentially all of our propositions on 3G, 4G.
Sure.
So one of the things that's still going to come to the rest of our competitors is how do they deal with legacy 2G voice, just as we are dealing with legacy fixed voice.
Right.
So that's the first thing. The second thing is that even on our data-led propositions, our approach is uncapped and unlimited. We figured out that customers actually, all that they're looking to buy now is speed. Don't cap them on the broadband side. And that is why if you look in the market, we've been driving largely uncapped and an unlimited proposition. And that gives bill certainty to the customer. The customer knows exactly how much they're paying you. There will be no bill shock at the end of the month. And we have commoditized voice. So voice on a lot of our products is for free. And we give outsized data bundles. And our network, precisely because it's a modern IP network, we are able to deal with the volume of traffic on the data network going forward. So that's the big bet we've made, Godfrey, in terms of our mobile business proposition.
Absolutely. And someone was asking me as well the question, with this huge focus now shifting onto mobile and data, you wonder why the government ever decided to sell that Vodacom stake. But I know that is not for you to talk about. What you can talk about, though, yeah. What you can talk about is what that shareholder is doing, because there is a perception in the market. In fact, it's not a perception, it's a reality that you are getting a discount on your share price performance because of that government shareholding. And there's been these murmurings that governments want out. Any update?
I mean, it's painful because clearly there is an anticipation that the largest shareholder will dump the shares. In the most recent while, though, we have not received an indication that they will still proceed. I mean, the world in South Africa this year is different to what it was last year. Last year, when those statements came out, we were staring down a ratings downgrade. GDP growth was negative, and the fiscal position in terms of treasury was very, very precarious. VAT has been increased. I think government will manage their costs differently. I think there's a bit of an uptick on the GDP side, and also the ratings downgrade has been averted. We may be a consideration, but I don't think we are now high up that stack as we were last year. And I think there's also been a realization that a very loose conversation around what government is going to do has an impact on the share price, and the net loser in the end, even if there is a sale, will be the major shareholder themselves. And I think there is a recalibration there.
Yeah. Would you be happy with the government remaining with that shareholding, or is that out of your hands?
Well, I mean, for me, all long-term shareholders are good, all right? So if government is a long-term shareholder, for us, that's good, because you need that sort of stability in your shareholder base. Over the last 5 years, I must say, actually, we've had a very, very decent interaction with government as a shareholder. I think that, and I separate that with the government as a policymaker. Just their shareholder role, they've really left us alone. We've interacted with government as we interact with the rest of our shareholders. There hasn't been any special dispensation that government has sought or obtained from our side. So as a shareholder, actually, they've been more than decent. And so for us, when a shareholder is like that, is long-term, they support you in the strategy, it's absolutely acceptable.